We're joined now from Melbourne by ANZ Banking Group's Head of Commodity Research, is Mark Pervan. Mark, thanks a lot for joining us. Well, what do you think is behind this move for gold? Do you think there's actually also physical demand out there in the shape of the Indian wedding season helping to drive things along nicely?
It seems to be well timed for that kind of development, but it's certainly underlying, I think, a strong flock towards gold as a hedge against this falling dollars, as you've been mentioning in the last couple of minutes. There's also been heightened uncertainty around sort of financial markets earlier this year. So, there's really been a lot of positive sort of factors driving gold prices higher this year. They're all sort of, moving in the right direction. There hasn't really been a negative factor yet. And I think the latest development with, Japan overnight flagging further quantitative easing and that sort of being now priced in globally, that's very positive for the gold market in the sense of a weak dollar and markets looking for higher returning assets elsewhere.
Yes, a lot of talk that other people are going to go down this path again of adding further stimulus measures here. What impact does that have on the gold price?
Well, the gold market is a heavily bought market. It's already there's a heck of a lot of interest in there. Record high net longs and open interest in US futures markets. So there might be a bit of a bumpy ride going forward, but if we continue to see this accommodating stance by these global central banks, then it has to swing interest towards the growth orientated sort of equity and commodity markets, and the gold market's certainly a benefit of that as well. So. We can see, unless there's a major change in stance, particularly on the currency market, further upward momentum in the gold market. And I should stress there is a lot of positive upward momentum driving prices at the moment.
All right, so the trillion-dollar question is, where does gold end up? What's your target for year's end, for instance?
Well, unfortunately, it's a bit of a moving target. We had 13.75 penciled in for early next year, but as markets tend to do, they price these things in a lot quicker. We'll have to revise that again, but we're certainly bullish, positive on the outlook for gold. A recent LBMA conference in Europe with a lot of the key gold industry participants there, we're talking a 1450 mark by early next year. There's no reason why it can't move towards that pretty quickly. There's not a lot of key resistance in the gold market at the moment, so it could move in $20 to $30 US ounce movements very quickly. So, it's a breaks through 1350, then it's on its way towards 1400 pretty quickly.
Mark, are you then talking about another 5% decline for the dollar? That would be the corollary of what you're saying.
Well, there's not too many people positive on the dollar at the moment. I think the market's now pricing in that the US Fed will sort of follow a similar tack to the BOJ and be very accommodating in its monetary policy. I think that's already priced in, but it just sort of creates certainly a flat to weakish outlook for the dollar near term. There's not really anything on the near-term horizon to suggest that the dollar could rally unless there's something out of Europe in the way of weakening the euro.
Mark, thanks a lot for that. Mark Pervan there, he's from ANZ, just joining us there, as you saw behind from the banks of the Yarra River there in Melbourne.